So the gold market, which got a rebound in here, if you believe that there's likely to be some inverse correlation and the dollar likely to begin to move to the upside, the euro to the downside, then that would assume that the gold market would beginning to move to the downside again also. Now, when you look at these patterns, it is calling for a decline again. Now, a conservative read on this would be that it tests this low right over here at around 1667, sometime out over here in May. Remember that if the gold market mostly correlates inversely to the dollar, then so does the euro market. So that means there's a positive correlation between the euro and gold. We expect that the euro will make its will decline and make its bottom in early May. And that's the same thing we see in gold. Again, the conservative downside estimate is at around 667, with a potential down over here to under 1600 right there. So we're in a period right in there where you could get some pretty good selling in the gold market. Now, the silver market is a lot better, and that market looks like it's begun to move up again. And we think that silver will overperform, and I'll show you that in a moment. It would be kind of nice for the gold market if it didn't have this throwaway down there, but for traders it might be better because it might be a better buying opportunity down over there. And then when you finish this period in here and you get into the next rally, there's two important things to state. Number one, the rally could be strong. So if it was at 1600, it could rally to 1850 after that. But it would still be in what is a significant downward condition, where we look at the dominant directional component right in here. So you can see in here there's kind of a downward channel, and I haven't had this in, but I'm going to put it in there, where that's really the directional component we're dealing with. And this big cycle right over here that we're looking at, that has a bottom set for November, really says that it's likely that once you get another rally going in the summer in the gold market, it's going to fail, and you could get even lower prices in gold out over in towards the end of the year. That really is our analysis right now for the intermediate and longer term. And so I can't get really excited when I look at the gold market in there. Gold market on a short-term basis, remember we said a few weeks to the downside. So when I look at this cycle pattern, that points to June 2nd. And that may be about the time frame that the gold market does make its low. So we're getting this rally right over here. And that is getting into these resistance areas, the 38, the 50, the 618. We're not really looking for much more upside, as you can see, and then beginning to move to the downside. This first downside move here may not be that strong. There may be a stronger one out over here, or maybe the failure is right in here, and it's significant in this time period right over here into May. So we talked about early May, and the way this all projects is that the decline, which may get you down to 1600, could come down over here where the euro currency falls in early May, or it could be the secondary move here out in June. We're not really sure about that, though the cycle patterns say there is risk in both places when I look at that. So it's really hard to get excited about the gold market when I look at it. You are invited to hear me speak Thursday, April 22nd at 3 p.m. Eastern Time at this great free event, Wealth365 Summit, in which there will be over 50 speakers in 6 days. My topic, momentum analysis, the key to trading success. I think you're going to find it incredibly valuable. Please use the link that's included in the description of this post. I hope to see you there.